Today is Sunday, April 12th, 2020. Happy Easter, everyone. This is when this interview is being recorded. Today I have the pleasure of speaking with Brecht Arnaert. Brecht is a monetary expert at the Universidad Rey Juan Carlos in Madrid and has been the editor-in-chief of Macro Trends since November 2013. Under his leadership, the magazine has shifted from a magazine about gold and gold mining stocks to a thorough magazine about the dangers of the monetary system and how to prepare for it. So I think it's really appropriate to have Brecht on, especially for my European viewers. On this channel, we focus a lot on the Bank of England and the Fed, even though I do have my NDECB mug or Ferme la Banque, la BCE, and the ETHEREUM herunterfahren. And I've got Christine Lagarde behind bars. So, yeah, thank you very much, Brecht, for accepting my invitation. And yeah, tell us about Lagarde and what she's doing, if she's really that powerful. And you said you want to talk about deflation as well.
Yes. So first of all, maybe I can give some background about the philosophy I use to analyze markets. And that would be the philosophy of the Austrian School of Economics. And having followed you for a couple of months, I know that you are very aware of the fact that what is called inflation in the mainstream media is actually only the result of inflation. So rising prices are not inflation. Inflation is an act. It is the act of putting water into milk, to say it in the most easy way possible. So you have 1 liter of milk, and then you have 1 liter of water that you add to it. Well, then you have 2 liters of milk. But the nutritional value per centiliter drops. And that's when you get higher prices. And so what has been happening in the last 10 years is that you have a European Central Bank who has inflated the money supply very aggressively. And you know, if there would not be a counter force, which is called deflation, we would already be in hyperinflation. So that is one of the things gold bugs tend not to understand. That is that Lagarde can print 10,000 billion new euros. If the deflationary force is bigger, then you will still not see inflation. Your economy will go bankrupt in the end, but that is, you know, that depends on how long people are willing to put up with this.
I see. And so how is the deflation happening? Is it just through loans being written down?
Yeah, that is the most important source. And there you have a chiasm as well. So just as the rising of prices is not inflation, but a consequence of inflation, the lowering of prices is not deflation, but the cause of deflation. And let me explain that to you. If you look at a free economy, you can look at it as a Gauss curve. You know, you have very little small companies, and you have very little big conglomerates. Most businesses, 80% or even 90%, are family-owned, multi-generational businesses. This is the middle class of your economy. This is also the middle class of your economy paying the taxes. Because freelancers are so mobile, they can go to any country and not pay taxes. And multinationals, they have, you know, whole legal departments preventing them from paying taxes. So the middle class of the companies is paying the taxes, and this is important for deflation. But what happens if the central bank injects more money in the money supply? Well, this makes this Gauss curve flatten. And why is that? Because you have fundamentally only 2 ways to make money. Or you make money on the margin, which is what small companies normally do, or you make money on volumes, which is what big companies normally do. So in a healthy economy, it's a mix of both. But if you inject money into the money supply, you are lowering the interest rates. And so you are artificially giving a subsidy, a capital subsidy, to those companies that work on volume. Why is that? If your margins are small, then the cost of financing relatively is much more important. If your margin is, for instance, 1% on some stupid item coming from Amazon, but your cost of borrowing is 0%, and it goes to -1%, well, you have doubled your margin. And that is how the big companies, the multinationals, actually use central bank money to cannibalize the rest of the market. And what happens is a duality. The middle class evaporates, and the only thing you have are freelancers, which you could see like flies, and then big elephants, which you could see like the multinationals. And so what has this to do with deflation? Those small companies are still trying to survive. So the only way they can compete with a big company financed by central bank money, they do it not directly, of course, but through selling their bonds to banks, and banks buy them with the money they got from the central bank. The only way to survive is to take out extra loans, to be more capital intensive, and to specialize in a niche. That way they can survive another 10, 15 years, but that is a losing battle. Because even in that niche, the moment it gets more capital intensive, the bigger companies can just buy them over, or they can compete them into the ground. And so what you get is a whole lot of loans that would never have been taken out in a free society, because in a free society, those companies finance themselves simply by saving up the money, saving from their free cash flow. And so what happens when the interest rates are lowered even further is that these 80% of companies in the middle, they go broke. And this is what is called the non-performing loans. And to give you just one figure, the Federal Reserve branch of St. Louis, which is the study branch of the Federal Reserve, has published the figure for Belgium in 2016. That is the last figure, by the way, 4 years ago. I wonder why that would be at 3%. So that is your deflation. Look at the non-performing loans. So if your inflation is 3%, your deflation is 3%.
So 3%, negative 3%.
Yeah.
Well, is that the rate at which
money gets destroyed?
Oh, I see. The non-performing loans, I see.
The non-performing loans are the way money is being destroyed, because you have to understand, for us, if you loan from a bank, that is on the passive side. But for a bank, this is an asset. So this is an asset that is gone.
Yeah.
But on the basis of that asset, the bank has made loans themselves to other banks, to the interbank circuit. So people don't understand, if you get 100 euros out of the wall, out of a cash machine, you are actually destroying maybe 10,000 euros. Because if you are liquidating some of your assets, well, the bank also has to liquidate some of it. It's fractional reserve banking. So when a loan fails, let's say a loan of 100,000, well, this could be 10 million that is failing. So in a free society, a bank that has extended its credit too much, and to businesses that don't have good prospects, that bank would fail. But in this system, well, the deflation that normally should take place is counteracted by re-inflation. But of course, this re-inflation causes the economy to become more dual still. The same cycle starts. Companies borrow more to be able to compete with the big ones. In the end, they cannot cope. Their loans fail. So for every inflation you do, you already have an implicit under pressure, an implicit deflation waiting to come out. And so the big battle that Lagarde is waging is the battle against deflation, not understood as a lowering of prices. No, that has nothing to do with it. Understood as the failing of loans. And so she will print much more. I predicted that she would print 750 billion on the 24th of January. And not even by the end of March, she had printed exactly that amount of money. And I'm telling you, this is just the beginning. because that money is now going to companies who are absolutely not profitable. And while they are not being profitable, they are still competing with businesses that are profitable but will fail. So that's a new wave of deflation coming on.
This money is going to these, is it the big businesses or the family businesses it's going to?
It's not going to family businesses. It's going
to the big corporations.
Yeah, or corporations that might be of families that are well connected. Those businesses who are closest to the system, they will get bailed out. But don't look at your mom and pop shop to get bailed out. You know, this is to me, it's communism creeping in.
And with the lockdowns as well, the mom and pop businesses, they're disappearing. So that's going to be even worse. What do you think their end game is communism? Because central banking is one of the 10 planks of the Communist Manifesto. Strange that most people don't realize that.
No, and this is because of cultural Marxism, of course. Evil never knocks on your door and says, "Hi, I am evil. I am going to turn you into a slave." That's not how evil works. Evil disguises as the good. For instance, now we have to show solidarity with people who are ill. Well, who can be against solidarity? But meanwhile, this crisis is being used to inject more money, something Greta Thunberg could never do because there was no crisis feeling. But now, a mild flu, we can say that, it is a mild flu, is being pumped up, inflated like everything else to sell the idea that we need crisis injections. Yes, we need them to save the banks, because I'm telling you one thing. If this virus would not have come along, banks would already have crashed.
Yeah, because they wouldn't have had the excuse to do what they're doing. The banks and the governments, people would have been outraged. Some would have remembered they were already bailed out in 08. Why should we bail out them again? Haven't you learned your lesson? 2 times is too many. And what do you think is going to happen, for example, to gold and silver? Because also hyperinflation is the loss of confidence in the currency. Yes. So if we get all this currency injected into the system, this money and credit, and the economy doesn't pick up, I've read that during the Weimar hyperinflation, the economy was doing really badly, and they had so much debt that eventually the banks didn't trust the paper assets anymore, and they themselves started closing their non-performing loans and putting the easy money into tangible assets. Do you think that could happen?
Oh, it could happen again. I'm practically sure it will happen again, because these countervailing forces, inflation and deflation, if you have inflated, if you have made an error, then if you have drank too much, then the next day you will have a hangover. But if you don't want a hangover, well, keep drinking, but then you will have to pay the price later. And so I think we will go to hyperinflation. I cannot say when, and you have mentioned a very important word, which is confidence. If you look at Argentina, for instance, nobody trusts their government. But Japan, who has a much higher government debt, does not go into hyperinflation. Why is that? Well, the only difference is culture. And we Europeans tend to still believe, to a great extent, that a politician has been chosen as the best of us, even though there is ample data to the contrary. But there is this idea that our politicians are better people than we are. And I am one of those people who does not believe that.
Me too.
Yeah, but the thing is that you can always prevent the deflation from happening, but at one point you will have a hyperdeflation. And when a hyperdeflation comes, the only thing you can do is to print so much money that no bank fails. That is then the hyperinflation. And it will twist like that. It will come like that. You can never predict when it's going to be, because now, for instance, the Dow, who has a big correction, I think the Dow can go to 50,000 points easily. Why? Because lowering the interest rate, I will talk later about gold and silver, but lowering the interest rate from 1.75 to 0, you have been a bond trader for years, so you know what that does to bonds. So the 30-year treasury, they made a killing on the plus value, the value over par. Okay, but once this value is created, profits will be taken. And where can you go with your profits then? Well, the only market that is liquid enough to go with your profits is the stock market, even though it has, and it's well priced now. It's like 32% lower. So what you will see in my mind is a failing economy on the one hand and a booming stock market on the other hand. Again, that dualism. And so when people see that, when people lose their jobs, and when they see that the system is actually only rigged in favor of people who already have capital, that is when hyperinflation might come about.
I see that. That's interesting because there's a lot of people, and even I have said that I think the Dow won't go make a new high, that it could go down to 9,000, but you could be right. I mean, that's why there's a market. There are buyers and sellers. So what it says, I think, is that we are in unprecedented times. And you were speaking about how the central banks will just go into overdrive, and it seems like that's what they're doing. You look at the Fed's balance sheet; it's gone. End of February, it went from 4.1 trillion, and we're now above 6 trillion in about 7 weeks.
That's the beginning. That's just the beginning, because now we have to apply this insight to gold and silver, and it's very important where you live in the world. I am positive for gold and silver in the Eurozone, in euro, because the euro will crash. I am negative for gold in dollars, and I will explain why. Gold is always seen as an insurance against falling asset prices. It's not even an insurance against the crash of the system. This is gold bull mythology. If you are a portfolio manager, you use gold as a hedge against falling asset prices, whatever they are. But if you are in an environment where, like the Zimbabwe stock market, things go up, it might see that we see gold trading at $900. But I wouldn't care, because I am in Europe and my unit is euro. And in euro, I think gold has a great future, although, of course, the value of each euro will drop and gold will not rise as most people think. No, gold just permits you to keep your purchasing power on parity with what it would have to be. But for instance, if you look at the parity between the dollar and the euro, it is a miracle that we still don't pay 1.50 euros for a dollar. It's a miracle. And the only reason the euro is still so strong is because the dollar is inflated at the same rate. But the big difference, of course, is that the dollar is the world reserve currency, while the euro is a local currency. So if I would have to choose which one will crash first, it will be the euro, and you will see the dollar high in the next years. All that negativity about the dollar dropping, I don't buy it for 1 minute. I think the dollar will go much higher, also because the emerging economies have lent such an incredible amount of money on the thesis of ever rising commodity prices. So 15 years ago, but now commodity prices are worth nothing. Look at crude, look at copper, look at everything. And of course, the dollar is going up since 15 years. So the relative price of having to pay off that debt is getting much higher. And there are only two ways to pay it off. Or you roll over the loan to the future, but that does not mean that the demand for dollars will drop. Or you print of your own currency, you buy dollars with that, and you repay the debt. And that is what Brazil is doing. The Brazilian real has fallen like incredible.
From 4 to 5, the dollar is gone. Yeah,
because they are importing the Federal Reserve inflation into their own country, and that is exactly what will happen in Europe. We will import the inflation of the Fed here. So for gold in euro, my God, I'm ballistic. But for gold and dollar, that's a different story.
Yeah, I agree with you about the euro, but with the dollar, actually, I tend to think that gold is going to keep going up versus the dollar, just because the Fed is going to inflate as well and print. I always talk about the currency sinking, think the euro will sink faster than the dollar. Yeah, and the dollar is, I guess, when you do have a system like that that is under threat, the center, the core of the system is always the last one to go.
Yeah. Yeah, I think that is very realistic, and people in the US should prepare for, or people in Europe should prepare for very heavy times coming. Yeah.
What do you think about the UK? I think it's the UK is in the same boat as the euro. We've got even a lot of debts, a lot of external debt.
Yeah, I think every country basically is in the same boat because the worldwide debt, I actually stopped tracking it because 10 years ago I knew all these figures, but it's exponentially rising. And
yeah, some people talk about it being 250 trillion, but then if you look at the unfunded liabilities in the US is 130 trillion or something.
Yeah.
And the national debt clock in the US, it's just jumping so quickly now. The debt to GDP was around 107 in the US, and it was stuck there for a while. Now it's at 112.
And you see all kinds of false dualities. This is what frustrates me most. People think, for instance, now that Trump is going to save the world and this QAnon stuff and everything. Just look at the data. Look at what Trump is doing with the national debt. It's very easy. If I want to be a politician, I can make the economy work. I just put in extra drugs and it will work. But who is going to pay that bill? So he's just the same as any politician. He's postponing the bill for the next guy.
Yeah, I guess the people who are pro-Trump would say that he's got a plan. He will create so much debt that it will implode and wipe out the system. I don't know. It's so confusing. What about in 2012, Mario Draghi basically saved the pigs, which is Portugal, Ireland, Italy, Greece, and Spain. I mean, I remember yields were at 7%, sometimes 10% in Spain. And then he came out and said, I'm going to do whatever it takes. Do you think they're going to be able to keep these interest rates in Spain and Italy and other countries as low as it is?
Yeah, I think so. I think if Lagarde just says the same as Draghi does, well, she will keep inflating and creating the money that is needed not to go broke and not to have this deflationary pressure coming out.
So just protecting the bankers and the bondholders, and I guess the consequence will be more and more eradication of the middle class, the family companies, higher cost of living, and higher gold prices as well.
Well, the cost of living actually, it has risen, but I would call this partly inflation propaganda, because it's very strange. Things that how to put this. A lot of the price rises actually don't have to do with inflation, because the inflation is countervened by how do you say that? A lot of the price rises have to do actually with more regulations and more taxes, and not that much with inflation. And you know, when a bar rises its prices of beer, it's not always because beer has become more expensive, but because more of the margin is taken by taxes.
Yeah.
So it's a very confusing thing. And another illusion people have is that when you inflate the money supply, that prices will rise. Eventually they will rise, but first they will drop. Because when you subsidize big companies that work on volume, then the price per unit of production is lower. So you can see technology coming in for nothing. What is a television worth nowadays? It's practically nothing. Why? Because the big manufacturing companies have been subsidized on their capital. But it's when the deflation sets in, when the companies that have borrowed and cannot repay their loans are going to waste, then of course the bigger manufacturing companies have no more competition, and then they raise prices. So it's actually the reason that the middle class companies are failing is because prices have lowered. They are too low, and they cannot, for that price they cannot compete. So the idea that inflation causes higher prices is correct, but only at the end of the process. In the middle of the process, they actually get lower. It's a very complex business.
Yeah, and I don't know if you've heard of Antal Fekete. He talks about how lower interest rates and the bond bubble and more inflation actually helps capital investment, and it actually hurts labor. So, and that's why the unemployment, even before this crisis started, unemployment in Europe has always been sticky and relatively high, except for maybe Germany and some other countries.
Yeah, I would have to agree with Dr. Fekete. He's a bit of a how you say that, a special theorist within the Austrian school, but I have learned a lot from him. It's very interesting.
So, to wrap up, what would you tell people in Europe especially, but also everywhere around the world, a way to protect some of their savings or most of their savings? And I think we are in an environment where protecting your savings is more important than trying to make a killing. So what would you say to them in terms of what you are advising your newsletter subscribers at macrotrends.be?
Well, our philosophy is that of an investment pyramid, in which the basis is the most secure asset, and then you build on top of that. And for us, the most secure asset is gold in small coins, because if gold goes up to 100,000 euros a kilo, which is easy the way they are printing, you don't want to go into the street with a bar of gold. They will knock in your head. You want to have small denominations. So gold is one, but before gold, even much more important, that you try to get rid of all the debt you have. So if you have an outstanding debt of 50,000 euros with the bank, and you have cash of 100,000 euros, don't try to be smart and use half of your cash to pay off the debt, because that is the most important thing. Don't expect banks to play by the rules. The moment we go to hyperinflation, any excuse will be good enough to impound your collateral, which is what they have always done in every crisis. That is rule number two. Rule number one. Rule number two is buy gold. We have 40% of gold in our portfolio, which is enormous to all standards, but not if you take the analysis we take. And the third thing, which is a bit more complex for people with little cash, is 30-year treasuries, American treasuries. We believe that now they're at 1.30 or something. They can go to 0. You name it, 0.5, 0.3, 0.2, and then you make a killing without wanting it. Actually, it's just fleeing. That is where the big money will flow to on the plus value over par. So that is what I would do as a European trying to protect his capital.
Great, Brecht. It's really nice talking to you. I met you because I was contacted by one of the viewers. They asked me to go to Holland to speak at your conference in March. Unfortunately, that was canceled by this crisis. Hopefully, I will be there sometime in May. Let's hope.
Yeah.
And
I foreseen it for the 16th of May. I don't know how long this quarantine will last, but if the virus gods are willing, we will see each other on the 16th.
Great. Thank you very much. And I enjoyed the talk. Maybe we'll talk again another time.